Am I audible? Can you guys hear me now?
Yeah, we can hear you.
Yeah, I can hear you. All right. So if you remember, the very first thing on our curriculum, that's the outline that I sent, is the, what do they call it? The candlesticks anatomy, right? And this is like one of the basics when it comes to technical analysis, because for sure, we're going to need a very good knowledge of candlesticks when it comes to confirmations. We have two types of confirmations when we're doing entries, which is the entry confirmation and the pattern confirmations. The candlestick confirmations and pattern confirmations, right? So which means that candlesticks are what's very, very important. So I want you to pay attention to this, the same level of attention that you would pay to every other classes, like the same level of attention you want to give stacking and this and that, just give it to this class as well, right? It is as important as every other one. Okay, and then just so that I mention now, I'm mentioning it because I know that this call is recorded and we will go over the recorded video. I've not dropped a procedure for the dairy, which is the dairy funding and how to create a dairy account and all of that. I'm going to do that, but we've not started synthetics yet, right? So the reason why I dropped only trading view and mass market is that the trading view is important so that you can do your assignments. Why the mass market for what's not sizing? Everything is like it's going to be process by process, right? So just stay updated on the group and watch out for anything that will drop there. It's going to be dropped as it should, right? So over to the topic of today. Today we're going to be treating candlesticks anatomy. Now the most important candlesticks are the ones we're going to pay consideration, right, and attention to. So we have bullish engulfing candlesticks, bullish and bearish engulfings, right? Which is like the engulfing candlesticks, right? We have the engulfing candlesticks, and then we have the hammer, the pin bar. We have I think the hammer, the pin bar, the doji, and then the engulfings. These are like the most important candlesticks that you're going to need when it comes to like relating it as per trading, right? Now, if you look at my charts, when you open your trading view, for those of you that are very new, right, you started a trading view account and you followed the process of arranging your trading view. I'm very sure that when you open this, although mine is black and ash, usually it's supposed to be what green and red. The green for when the market is buying, the red for when the market is selling. But on my own chart is what ash for when the market is buying and black for when the market is selling. Now, if you open your trading view, you're going to see what? You're going to see series of candlesticks like this. There are so many of them all over. And then you're wondering, now these candlesticks are actually what you're interpreting. This is the price action that you're learning how to read in order to know when to buy or when to sell. And there are different types of candlesticks, right? There's the morning star, the evening star, the this, right? But then we're paying attention to only the most important ones that we're going to use, or you're going to see me mention consistently. Now, if you look on my screen, I'm very sure, Stan, my screen, you can see my screen, right?
Yeah.
Yes. All right. Now, if you look at my screen, you can see something I'm up about a bullish candlestick, and you can see what a bearish candlestick. For the purpose of people that are new here, when someone says that something is bullish, it means that that thing is going to the upside. You understand? For something to be bullish, it means that that thing is buying to the upside. That thing is moving to the upside. There's a movement to the upside. For someone to say that something is bearish, it means that that thing is selling. Do you understand? For a trend to be bearish, it means that that thing is selling. Now, let me give you an example. If BTC, let's say BTC is currently at $80,000, and then the price of BTC changes from $80,000 to like $150,000. You say that the market is bullish. It means that the market is the market is buying, is moving to the upside, right? But then the BTC should move from $80,000 to like $30,000. You say that this is a bearish market. The market is selling. The market is moving to the downside. which means that if I should tell you that this is a bullish candlestick, it means that it is a candlestick that represents something going to the upside, while a bearish candlestick is the one representing something going downside. Now, if you look at my screen, you would see that one is green and one is red. And when you set your trading view, right, for those of you that have done the needful, you open your trading view account and you are going to trading view. If you look at your trading view now, you see that some candlesticks are green, some candlesticks are red. Now those green candlesticks are what we call the bullish candlesticks. Why the red candlesticks are what we call the bearish candlesticks. Now, if you look at this candlestick, for some of them that have wicks, you see this thing protruding to the upside here. This red thing here is called what? It is called a wick. That's a wick as per WICK, right? It is called what? It's called a wick. Now, for this candlestick, it can have a wick, it may not have a wick, right? But then it has 4 features, which is a high, a low, an open, and a close, right? So, how do you know that a candlestick is bullish or bearish? It is depending on how it closes, right? The bullish candlestick is just like the opposite of the bearish candlestick, right? They're just like the opposite of the bearish candlestick. This means that since the bullish candlestick is a buy candlestick, the bearish candlestick will be what? A sell candlestick. And if you look at the bullish candlestick, this is where it opens. You see this point here that I marked out to this level. This is where the bullish candlestick opens. Now, remember that in the market, we have both buyers and sellers. There are times, for those of you that are already trading, I think there are times you have like a bias, a buy bias. Please help me look at XAU USD, and then you go to the chart to map it out. You have a buy position, and then somebody else goes to map it out. They have what? A sell position. This is to say that there are times that you can be buying in the market and somebody else is selling. Do you understand? So there's constant buy. Somebody first. Please look at talk now. So there's constant buying and selling pressure. Who can help me face that person? I need to go to people. So there's constant buying and selling pressure. Oh my God, this is that now.
No, already share like I can't already share that I can't really share like this.
As I was saying, there's constant buying and selling pressure in the market because people are buying at the same time other people are selling. So it's just like both buyers and sellers are just like both buyers and sellers are in constant fight of who is going to rule the market. You understand? So that is why you have a candlestick open at this level. And then, if this is a bullish candlestick now, it has opened at this level. And then you now have sellers who sellers will now push that candlestick, they'll push it to the downside, right? Push it to the downside up to this point. And then buyers will now be like, oh, no, this is supposed to be our turn, right? And then they will now move this candlestick from this level that it was pushed to upwards, up to this particular high here, right? Now, remember, it opened at this point, at this level. Then sellers pushed it to the downside, and then buyers were able to push it again to this point. And what happened? Sellers finally pushed it, but then they were not strong enough to push it below this level. So this was where the strength ended, and this was where the candlestick closed. Now, for a candlestick that opened at this level and closed at this level, you agree with me that it closed at a higher price, right? It closed at a higher price, which means that it is bullish because it closed above the opening price. So once you see a candlestick that closed above the opening price at any point, that is a bullish candlestick. Most of the times they're going to be represented with green on your candlestick chart, on your trading view chart, except you edited the colors, right? Then you know what you represented your buy or your sell candlesticks as, right? But then once the candlestick closes above the opening price, we have a bullish candlestick. Now the inverse for the bearish candlestick. If you look very closely, this was the opening. Remember that I told you that a bearish candlestick is a sell candlestick, which means that it is pushing price to what? It is pushing price to the downside. The buy candlestick is what? If you're buying something, right, you're pushing it to the upside. If you're selling, you're pushing it to the downside. So which means that since we're saying that the sell candlestick is pushing price to the downside, it will open at a higher price, right? So if you look at this now, price opened here, and then buyers were like, no, 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 let's try. And then they were able to move the market from this point to this high. But the sellers are like, oh, we are in control of the market, nothing is happening. And then they push price all the way down to this low. And what happened? Buyers managed to still push it to a bit of a higher price, and finally it closed there. Now, the moment a candlestick closes below the opening price, this is the opening price, this is the closing price. The moment the candlestick closes below the opening price, it is what? It is a bearish candlestick. Remember, the bullish candlesticks, what did I say about them? I said that they actually close above their opening prices. The bearish candlestick does what? Closes below the opening price. This is the opening price of a bullish candlestick. This is what? This is the low, and finally it got to this high, and this is the close, right? And then if you look at this one, this is what? A bearish candlestick. It opened at this price, go to this low, and then finally what? Closed at this price, right? So once you have a close below opening price, it is a bearish candlestick. Once you have a close above opening price, it is what? A bullish candlestick. So once you go to your charts, if you look at my charts now, I told you that my bullish candlesticks are represented in cash, while my bearish candlesticks are represented in black. If you look at your own chart now, you would see what? Green and red. So those ones on green, they are what? Bullish candlesticks. And you can see that for every time that they form, what happens? Price is what? Price is moving to the upside. You can see. For every time that they form, price is what? Buying to the upside. The inverse, you can see the bearish candlestick now. So every time that they form, price is what? Moving to the downside. You can see that this is what? This is moving to the downside. This is a movement to the downside. This is what? A movement to the upside. So for every time that the bullish candlesticks from what it all happens, right? They represent what? An upward movement. While the bearish candlesticks represent what? A downward movement in price. Right? Now, this is like the basic buy and sell candles. Let's talk about now the important candlesticks that we're focusing on. I told you that the first one is what? The engulfings. Now, these engulfings are like one of the most important, if not the most important candlestick when it comes to trading. They are what people use to map out other blocks, so many blocks, and they have power, right? They have power. When it comes to other blocks, entries, this and this, these engulfings are very important, right? Now, I want you to look at the idea of an engulfing as, let's say you have a friend that is very tall. Let's say you're 5 feet, and then you have a friend that is like 6 feet tall, or let's say 6'3", and then that person hugs you. The person is what? Going to cover you. Do you understand? When the person hugs you, people will see the difference in height. The person is what? Covering you. So the engulfing candlesticks are just like candlesticks that enclose another candlestick, right? When you have two candlesticks and one of them is what? Covering bigger than the second one. If you look at this one now, if you look at these two candlesticks now, this particular candlestick is what? It is bigger than the smaller one. This other one is what? Bigger than this one. Now, this particular candlestick pattern is very different from something. Let's say this particular one now is very different from something like this, whereby here now you have what? You have a, let's say, a red, and then sorry, let me take this in. A green, right? Let's say something like this. Now, this particular engulfings, these are not engulfings. This one here now, these are not engulfings. Okay, these are not engulfings. An engulfing candlestick must engulf from the right. Do you understand? In this case now, this is a type of candlestick that we call haramis, right? But then we're not taking it because it's not important, right? This is not engulfing. For something to engulf, it must engulf from the right, which means that the candlestick by the right must be the bigger one. Do you understand? So we're not calling this an engulfing, but this is an engulfing. This is an engulfing. So we have two types of engulfing candlesticks. We have the bullish engulfing candlesticks and the bearish engulfing candlesticks. Remember that I showed you guys here what the bullish candle looks like and what the bearish candle looks like. Remember that the one in green is what a bullish candle, the one in red is a bearish candle. Now, if you look at this now, you can see that the green candle is engulfing this small candle, engulfing as per enclosing, is covering. It is if you look at these two candlesticks now, there's difference in the both highs, right? There's a difference in the both in the heights of these two candlesticks. One is taller than one, right? So that taller one is enclosing or covering the shorter one, right? So since it is the bullish candlestick or the green candlestick or the upward candlestick, whatever you can use to remember it does not matter so long as you remember it, right? So since it is the bullish candlestick that is covering the smaller one, it is the one that is going to bear the name, right? So this is a bullish engulfing candlestick, a bullish engulfing a bearish candle, right? A bullish candle engulfing a bearish candle is called what? A bullish engulfing candlestick. The inverse for this one now, you can see here now that the sell candlestick or the bearish candlestick or the downward candlestick, whatever you can use to remember this now, is the one that is engulfing the bullish candlestick. So in this case, this is going to be called a bearish engulfing candlestick. I told you that the candlestick that is covering the other one is the one that will bear the name. Just look at when you have A and B. A is taller than B, right? And you come into the class, you're looking for the first person you see is the taller person. And you're like, oh, you stand up, come here. Do you understand? So the most significant one, the taller one, the bigger one is bearing the name, right? So if you look at these two candlesticks now, and you see that okay, the bearish one is actually the bigger one, you just know the name immediately. It is a bearish engulfing candlestick. You look at two candlesticks, you see that it is bullish one that is what the bigger one. You just know the name immediately. It is a bullish engulfing candlestick. So if someone asks you now to map out a bullish engulfing candlestick, and you go to the chart, you're like, oh, you go to the chart, you see two candlesticks. Now, in this case, now I can see something here. If you look at my screen, we have what? We have a candlestick here, and we have another candlestick here. So this is what? This is candlestick A, this one here, and this is what? Candlestick B at this point. That is what candlestick A and candlestick B at this point. Now, if someone is to ask you, map out a bearish engulfing candlestick, you're not going to think. You go to the chart, you see a candlestick that works, you see a candlestick that engulfs the other one, right? And then you look at it, you ask yourself, oh, okay, which one is the taller one? Which one is the bigger one? Which one is engulfing each other? If you look at this, you see that what? You see that the bearish one is bigger or is covering the what? The bullish one. So in this case, this is what? This is a bearish engulfing candlestick. Now, these bearish engulfing candlesticks, when price comes them, they usually come with a change in trend in the direction of the name, which means that a bullish engulfing candlestick is going to represent that price wants to start buying. Price wants to start going to the upside. The bearish engulfing candlestick is going to represent what that price wants to sell. Price wants to start going to the downside. If you look at them, most of the times that what the bullish engulfing candlestick is from, you see that what we had with higher prices after that. Let's look at this point here. This is a small candlestick, a small bearish candlestick at this point, and we have a bigger candlestick, which is what a bullish candlestick at this point. And you can see that this big candlestick here covered the small one, right? Which makes it what? Which makes it a bullish engulfing candlestick. I'm very sure that most of you did not have to guess now, right? So I told you that the one that has the that is bigger is the one bearing the name, right? So this is now what a bullish engulfing a bearish candlestick. So this is called what a bullish engulfing candlestick. And you can see that after price formed that bullish engulfing candlestick, what happened? We had higher prices to the upside. This is another bullish engulfing candlestick. You can see that this particular candlestick here, this bullish candlestick, did what? Covered the bearish candlestick. And you can see that price continued with higher prices. Again, here we had what? We had a bullish engulfing candlestick. We had this particular candlestick here engulfed the bearish one, which is, sorry, you can see this particular candlestick here is bigger than this one. It's covered this one. So we had what a bullish engulfing candlestick, and you can see that price continued to the upside. Now, this is what I was trying to point out to you guys. If you look at these two candlesticks now, this is not a bearish engulfing candlestick. You can see this candlestick here and this particular candlestick. For a candlestick to be what an engulfing candlestick, it must engulf from the right. It must be bigger from the right, right? So this is not what an example of an engulfing candlestick. But if we look at what happened here, we had what a bearish candlestick. Remember that my bearish candlestick is what represented in black, and my bullish candlestick is represented in ash. So if you look at what happened here, we had a black candlestick, which is what in this case is what a bearish candlestick. On your own chart is most likely going to be what red. So you can see that this candlestick is what engulfing this particular one. It is longer than this one that it is covering. I mean this one that is covering, right? And so since it is the bearish candlestick that is covering that one, it's going to bear the name what bearish engulfing candlestick. And I told you that most of the times that this particular candlestick comes, what does it come with? It comes with what? Lower prices.
Could you use the cursor? We can't see your point at the market.
Oh, look at what, sorry, I'm trying to represent this and this. Are you with me now? So I said that if you look at this particular now, we have this candlestick A and we have this candlestick B, right? So I'm trying to say that if you look very closely, this particular candlestick, this bearish one, covered this bullish one, right? So in this case, it is what it is a bearish engulfing candlestick. And I told you that when price creates a bearish engulfing candlestick, it usually comes with what? With a down movement in the direction of price. You can see how price moved to the downside after the creation of what? That particular candlestick. Right? And you can see after the bullish candlestick was created, we had higher prices. So the bullish engulfing candlestick usually represents higher prices in price. Right? Usually comes with higher prices in the market, and the bearish engulfing candlestick usually comes with lower prices in the market. For people that trade only candlesticks, this is how they interpret them. But remember that it's not like when you hop on the chart now, you see a bullish engulfing candlestick, and then you just take a buy position. Of course, it's not going to be like that. We're going to, the main purpose of this course, right? We're going to learn how to put everything together and other confluences, right? So we're not trading just candlesticks, but you need to understand how the candlesticks work. Now, over to more examples. At this point, you can see here we have a bearish engulfing candlestick. We have candlestick point A, we have candlestick B. Now, if you look very closely, this candlestick B, which is a bearish candle, can you see that it's covered candlestick A, right? It is way longer than candlestick A, which makes it what? Which makes it a bearish engulfing candlestick. And you can see the way price sold to the downside after the creation of what? This bearish engulfing candlestick, right? So the first type of candlesticks that we now look at is what the engulfers. Okay. Now we have another candlestick called the doji. I told you that the engulfers are what? They are important candlesticks. Now I want you to please talking. I beg you. If you look at the down of the screen, you're going to see a mute button. Just need to stop except you have something to show me. Because I told you that the engulfers are what? They are important candlesticks. Now the dojis are powerful candlesticks. They have power. strong reversal power. Whenever you see the dodgy candlestick, what should come to your mind is like indecision. They are indecision candlesticks. Now, if you remember our knowledge of candlesticks, right, you can see that every candlestick that we looked at, they actually have an opening price, a closing price. Like let's look at one random candlestick on the chart now. Let's look at this bearish candlestick, right? This is what? This is the opening price at this point. This is what? This is the closing price. This point here. This is the closing. And then this were the widths of the highs and lows. Now, if you look at that particular candlestick, that's the opening and the closing price. But if you look at what I drew here for this doji, it didn't have like an opening, it's open and closed at the same level, right? Price came, price created, price opened at this level, and then sellers were able to push price down to this point. And others, oh God, who is this person now?
Eric, please turn off your bloody mic, man. What's all this?
And then price was able to, buyers were able to push the market to the upstage, right? At this point, face this high here. And then sellers pushed it again to close at the same level at which it opened very closely. This particular candlestick does not have body. If you see here, the bullish candlestick here, you can see that it has a green body. This one has a red body. The engulfings as well, you can see that they were made up of what? Bullish and bearish candlesticks that had what body. But this particular candlestick has a little or no body. So when price open and closes at the same level or very close.
Sister, please, you're buffering, and it's because people's mics are on.
I don't like the fact that would give simple instructions to people and opinions. What is a child? There's something you can do whereby before everybody jump.
I think there's a way you can mute everyone from your end.
I'm more able to do that with children. I beg you guys, it's very simple. If you have anything to do this thing, okay. If I should mute everybody now, you won't be able to mute yourself if you have something to say. So am I supposed to do that?
There's a time for questions.
Please just mute everyone. Just mute everyone, please.
Alright, so as I was saying, now for the doji candlesticks, they open and close at very similar levels, right? When you have price open and close at the same time, just like indecision. Remember that I told you that when price closes above the opening price, it creates a bullish candlestick. So when price when price closes below the opening price, it creates what? A bearish candlestick. So for the doji, it's not like price is opening and closing at the same level. So it is not a bullish candlestick, neither is it a bearish candlestick. It is now what? An indecision candlestick. It's just like nobody won. You understand? When you have a fight between Mr. Red and Mr. Green, and Mr. Green was able to fight better than Mr. Red, it means that Mr. Green won. When you have a fight between Mr. Red and Mr. Green, and Mr. Red is able to push Mr. Green, and Mr. Red won the fight, it means that Mr. Red actually won. But what if you now have a fight between two of them and nobody won? That is when this doji is being formed. It is just an indecision, more like a draw. What you see as a draw, okay, nobody won this, right? So it is an indecision candlestick, but it is a very powerful reversal candlestick in the market. Remember that I told you that the bullish engulfings, right, they usually will cause higher prices in the market. The bearish engulfing causes lower prices in the market. But this one usually causes reversal in trend. More like price was going to the downside and then a doji forms. What are you now expecting? A reversal to the upside. Or price was forming, price was what? Creating highs, moving to the upside, and then a doji forms. What happened? It starts with going to the downside. You understand? It's more like a reversal candlestick. Let me check the chart to see if I can show you guys an example of when it played out. It's usually okay, you can see this what happened here now. You can see this very little body candlestick. I told you when market closes at very similar levels, right? It is a doji actually. Look at what happened here. Price was what buying, it formed this and it started selling. It's usually just like this, right? Very little body or no body. This is a very perfect example. You see this particular candlestick here, this one here. Let me take that out. Let's use it so it's better. Alright? So if you look at this particular candlestick here, this one, this is the doji candlestick. And you can see when it formed, market was what? Market was selling, and then we had this indecision candlestick, which I told you is a very powerful reversal candlestick. When price is what? Opening and closing at either the same or very similar levels, right? And then what happens? You now have what? Price move to reverse to the opposite direction. You can see that this formed in a downtrend and there was what? A change in trend to the upside. Price was started buying after that doji was formed. Again, this was what happened here as well. The price opens and closes at the same level. This is what another example of the doji candlestick. This particular candlestick here. This is another example of what a doji candlestick. You can see that what it has no body, right? It does not have body like every other candlestick. It's just like price opening and closing at the same level. And you can see that it was formed after a bullish candlestick. But immediately it was formed, what happened? Price started selling. It is a very powerful reversal candlestick. It is one of the most powerful, if not the most powerful candlestick, right? I told you the engulfings are what the most important and the dojis are what the most powerful. And then if you look at my screen, we see two candlesticks that we've not paid attention to. Now, these two candlesticks, what I want you to pay attention to most is what is the wick. You see this particular thing here now, this is what the candlestick wick. Look at this. Let's use this now. This is the wick. This thing here. And I'm painting it with. That is the wick. A candlestick wick. Right? It's usually formed like the price opens at this level and sellers give up and sellers push the market to the downside and buyers manage to push it back. It usually shows what a rejection. Whenever you see a wick form, just know that it is a rejection, right? Price rejecting from a point is what actually creates these wicks, right? Now, the pin bar and the hammer, they are like the same thing. You know the way we have bullish and bearish candlesticks, but then one works for the uptrend and then one works for the downtrend, right? It is very similar for this pin bar and hammer. The pin bar is like the bearish version of the hammer candlesticks. But what I want you to pay attention when it comes to the pin bar and the hammer is actually the rejections. Now, I told you guys the knowledge of candlesticks you're going to apply it when it comes to confirmations, right? When we get to entries, point of interest, and the rest of them, even starting points as well, right? We have two types of confirmations. We have pattern confirmations and candlestick confirmations, right? So we're going to need that when we get there. But then, back to this particular class. If you look at this particular rejection, right? When you have a very long rejection, that is most likely longer than even the body of the candlesticks, it shows you that, okay, buyers are in the market. Oh. Do you understand? When you have a engagement to the upside like this, remember that this candlestick, this particular candlestick, where did we, well, let me move to us. Sorry. Okay. So remember that this particular candlestick, right? Remember that this candlestick opened at this level. This was what? This was opening of this candlestick. And then sellers managed to push it down to this point. And so the level of power that it takes for buyers to push this from this price here to this upside at this point is much, is voluminous, right? Which means that buyers are in the market, right? So it shows you that okay, there is a strong rejection and there's what buy volume. You understand? So whenever you see these candlesticks, it shows you that what price is moving to the upside. There's what buy volume. They are rejecting sales. You understand? Sales are what being rejected, which means that this hammer candlestick is what is a type of bullish candlestick that represents what higher prices. Why the pin bar is just like the inverse. When you have price rejecting from a particular point, remember that the candlestick now, right? This is the opening price at this point. And then what happens? Buyers are able to what? Push price. Remember that buyers and sellers are fighting for a spot in the market. Buyers are able to what? Push price to the upside to this point. And then sellers come in with full force, right? And then they push price down to this point. It means that what there are sellers in the market, though. Market is what? Market is going for lower prices. Market is what? Market is going to start selling. You understand? So this hammer candlestick represents what? It represents a buy candlestick. You understand? It represents what? Higher prices. Whenever you see a rejection as sharp as this, you just know that buyers are already in the market. Buyers are in control. You understand? And when you see a rejection as sharp as this to the downside, it means that what? The presence of sellers. Sorry, let me represent this as well. I'm sorry. Okay, means that what the presence of sellers in the market is now what significant. Sellers are now in the market, right? So remember, just a walkthrough of what we do. This is what the bullish candlestick looks like. This is what the bearish candlestick looks like. And I made you understand that this is the opening price, the closing price, the low and the high. Price opens here, sellers push it down a bit, and what buyers are able to push it to this high, and finally it closes here, right? And the moment it closes above the opening price, it is what a bullish candlestick. The moment it closes below the opening price, it is what a bearish candlestick. And I told you that what we have bullish engulfings and bearish engulfings. Remember that the one for this to be an engulfing candlestick, it must engulf from the right, which means that this one here is not an engulfing candlestick. The engulfing candlestick will do what must engulf from the right. So this is the right way to map out a bullish engulfing candlestick, right? And usually comes with what higher prices. I showed you guys an example in the chart. This one is what the bearish engulfing candlestick, usually coming with what lower prices. I told you that it is one of the most important candlesticks, and I think even when you go back to your chart to map these things out, these are the most common ones that you see. These engulfing candlesticks, they are there, they are everywhere on the chart, right? And then you have what the dodgy candlestick, which I said is one of the most powerful candlesticks ever, right? It is a candlestick that represents what reversals. I showed you an example. I think I showed you some examples. You see them form in a downtrend, and automatically price does what price starts buying, right? And then you have this hammer candlestick. Let me show you on the chart what the hammer can look like. They're usually like long rejection candlesticks. Now, if you look at this now, this is an example of a pin bar, right? Remember that the pin bar is just like the inverse of the hammer. Now, this is what the pin bar looks like. If you look very closely, now price was what buying. Price was creating series of what bullish candlesticks. And all of a sudden, you had what that long rejection candlestick forming and hammer candlestick. And what happens? You start having lower prices. So once you see that rejection like this, it usually comes with what? And a change in the direction of price to the upside. Let me look for a good example of sorry, that was a pin bar. Let me look for a good example of the hammer. If you look closely, this is a doji. Remember that I told you that the doji is what I mean the strong candlesticks. Usually when price is in a downtrend now, the doji comes and then have a minor buy before the price continues. The doji usually has what just like price opening and closing at the same level or almost at the same level. right? Okay, again, this is what a P bar, and I'm looking for a very good rejection for hammer. This is what the bullish engulfing candlestick. You can see that this candlestick engulfs this one. This is what bullish engulfing candlestick. I told you that if you go to your chart to map this out, you see a lot of bullish ones, a lot of bullish engulfing candlesticks. They are all over your charts, and they usually represent what higher prices or lower prices depending on what they are. Okay. Let me go to the daily time frame. Let's look for a very good example of a hammer candlestick or this particular pair. But as I'm moving, you can still see an example of what the engulfings and the rest of them. This is the decision candlesticks. I told you the decision candlesticks are what we call the doji. You can see doji candlestick here, you can see doji candlestick here, right? Decision candlesticks. You can see doji candlestick here. Usually comes with a reversal in price trend. You can see that here we had price buying, created this doji and we started selling. Now I've seen a very good example of the hammer candlestick. This is a hammer candlestick. But it is sharp rejection from the downside, from this point. The price opened at this point, right? And then it sold. Sellers were able to push the market to the downside. And all of a sudden, what happens? Buyers came into the market and pushed it, finally closed at this point. This is a very good example of the hammer candlestick. It just looks like the opposite of the opposite of the timber, right? This is what a hammer candlestick. And I told you that if it's a rejection to the upside, which is the hammer, it usually comes with higher prices. You see that after this particular candlestick was created, right? We had bullish candlesticks come right after. But the price created the indecision candlestick, which is also called the doji candlestick. And that came with a reversal in the direction of price. Do you understand? So if you go to your chart, you'll see more examples of this. I think some of you have been able to add some best to your watch list. For those of you that have arranged your charts, you'll be able to see a lot of them in any pair that you open. For every currency pair or cryptocurrency pair, I mean forex currency like the AUDs and the rest of them, for every one of them, you see this particular candlesticks there. For the forex currency pairs as well, for the cryptocurrency pairs like Solana, BTC, and the rest of them, you would also see candlesticks in them, right? So candlesticks are just like representations of buyers and sellers in the market. So whatever pair that you open, you would see these candlesticks and examples of what they've done tonight. So I need to know, does anybody have any question so far? Any question or something that you would want me to be emphasizing? I think this is the point where we go back to it. All right, so I think at this point now you guys can unmute yourself. So if you have a question,
Yes, excuse me, ma'am.
One by one.
Hello?
Good evening.
Hello, ma'am.
yeah, I can hear you. Fine. Hey,
Please, could you speak more again on the candlesticks?
can I what?
You talk more about the bearish and bullish candlesticks before you get dolphins. Get the description.
Okay, so this is a bullish candlestick, and this is the bearish candlestick. If you set up your trading view, your trading view account, I think you will be seeing green candlesticks and red candlesticks on your charts. Do you understand? You see those ones that are green, that have green inside of them, they are candlesticks. It presents like when you say that something is bullish, I want it to be that what comes to your head or what comes to your mind is this thing is what's going to the upside. or when you say that something is bearish, I want it to be that what comes to your head is that this thing is going to the downside. If you were in this mode of give an example. I said, okay, let's assume the current price of your BTC is 80,000.
Flamingo. That means it's the title of that.
By who?
Lahore.
No, no.
Lahore. I like the music too. Not because I like the lyrics. Just like the music.
In case you wish to answer a question, you can just meet everyone. You attend to the question, then you unmute, please.
People are very interesting. So as I was saying, I gave an example whereby BTC is like $80,000 today, right? And then all of a sudden, tomorrow you wake up and it's currently at $150,000. It means that what we move to the upside. That is what we call it, the bullish market. So imagine a case scenario whereby BTC is at $80,000 today, and then we wake up tomorrow, it is currently at $30,000. It means that what? It means that we're having what? A bearish market. So I want it to be that what comes to your head is that a bullish candlestick is formed when price does what? When price closes above the opening price. For me to even say closes above opening price, once you say above, once you hear above, it means that what? It is to the upside. Above, for something to be above, it means that what? It is higher than something. So the closing price being above the opening price makes it what? Makes it bullish. Why for the bearish candlestick? The closing price is what? Below the opening price. When you say something is below something, it means what? It is down. What comes to your head when you hear bearish? You do what? Down. The bearish market structure means that price is what? Going to the downside. Right? So which means that this bearish candlestick represents what? Represents a selling candlestick. Selling. Something is what? Something is just falling. Falling exactly. Why the bullish candlestick is like something is what? Something is rising. You understand? So this bullish and bearish candlesticks, they'll be represented on the chart. Like if you look at my chart now, there are candlesticks all over my chart. Right? But then if you look very closely, I told you that my bullish candlesticks are represented in ash. Why the bearish candlesticks are represented in what? In black. If you look at my chart, you can see what bullish candlesticks, this one are what represented in what? In ash. And you can see that as price is coming down, is what is moving to what? To the upside. Because it is comprised of what? Of candlesticks that are what? Closing above their opening price. But if you look here now, we have what? Bearish candlesticks, the ones in what? In black. And you can see that as price is coming, then what is it doing? It is what? Moving to the downside. Why? Because it is comprised of what? It comprises of candlesticks that what? That close below their opening price. I don't know whoever asked that question, but are you clear?
Yes, I was the one that asked the question, and I am clear. However, could you shed more light on why the candlestick would go higher? You're talking about the buying and selling pressure.
So, the reason why you would have candlesticks move to the upside, like when the market, I told you that the market is just like, so you see, if you come to the market and you want to buy, there is someone else somewhere that wants to sell. It's just like it is made up of a constant competition between buyers and sellers at every point. You understand? Which means that buyers want to be in control, sellers also want to be in control. You understand? So which means that as this bullish candlestick opens at this point, let's say you come to the market now, a new candlestick has come, it's coming, it just opened at this point. Sellers want to claim that candlestick, they want it to be to their own favor. So they would attempt to do what? Attempt to push it to the downside, which is what happened here now. This candlestick opened at this level. And then sellers attempted to push it to the downside. That is what formed this week that we're seeing here. So they attempted to push it to the downside. So then the buyers are like, no, let's put more money into this. We should actually be the ones to win. And then they are able to move price from this level up onto this particular high at this point. Now, since they push it, the sellers to attempt again. Let's try. We can actually do this, and then they do what? they try pushing it down, and then they get tired at this point, which is what where the candlestick closes. And so, since the candlestick close is above the opening price, it means that buyers won. You understand? And immediately buyers win, it is automatically a bullish candlestick. It is the same way that the fight as well go, right? It is a constant fight. The market is a constant fight between buyers and sellers at every point, right? As you're buying, somebody else is selling somewhere. Just like this now, the market opens at this point, and then buyers are like, oh, no, let's push price, higher price, let's make profits, let's push price to the upside, and then they push price to the upside, and then sellers are like, no, we actually have to win this particular one, we have to win this, and then they pump money and sell to this point, and buyers attempt again, but then they get exhausted at this point. This is where the market stops. But if you look, the point at which they stopped is what is the close at that point is lower than the opening price. And I told you that once price closes below the opening price, we have a bearish candlestick. And when price closes above the opening price, we have a bullish candlestick, right? That is the narrative behind the formation of what is bearish bullish candlesticks. Okay, so are you clear now?
Yes, I am. Thank you, ma'am.
I have a question.
I have a question.
You mentioned
Hey, guy, what's your number? Yeah, no, go.
Yeah, go ahead, please. I have a question.
Here's what I want you guys to do. For those of you that have questions, since it's, I think so many people have their hands raised, and I think some people that are able to ask, their hands are not raised yet. You can go to the group, go to the section, the question section of the group, and just drop it. I will be attending to it one after the other, so that it's not so scattered. I'm going to unmute the mic now, and I want one person to ask at a time. As the person is asking, every other person, you can just go to the question segment. That's the question topic on our sample Telegram and drop a question there. You understand? I'll attend to it one by one as I'm talking. So please, as I unmute my one person should ask, every other person just drop a question on the Telegram topic.
Okay. Good evening, ma'am.
I have a question.
you mentioned
Yeah, go ahead.
so you mentioned can you hear me?
Of course, you're clear. Please go ahead.
Yeah. Okay. You mentioned the doji candlestick. It's a reversal candlestick, but in some of your charts, I saw that the doji candlestick when they are paired, the prices don't always change. Like the candlestick don't change. I don't think you can. Yeah.
So I told you that the doji candlesticks are the powerful candlesticks that are So I was saying, sorry. The doji candlestick, I told you that they are reversal candlesticks, which means that majority of the times that you see them, they usually come with a change in the direction of price. But remember, let's say disclaimer, these particular candlesticks are just like these candlesticks are part of what we're doing here. It's not because you hop onto the charts and you just look for a bearish and okay, price just from the bullish and engulfing candlestick. Let me start buying. Right? You're not buying with these candlesticks. You're definitely going to have the confluences. Right? So it's not like anytime you see a doji candlestick, you expect a reversal, then you just will start selling. That's one. Secondly, what I want you to know is that the reversals can be minor. You understand? Like what happened here, if you look at this particular point here now, what happened here? We had a doji at this point. This is a bullish candlestick. Price forms this doji. And then we had a temporary sell before price continued in an uptrend because it created what a bullish engulfing. So the sell cannot be a very temporary sell. And the price continues. That is why you're not even using this particular candlesticks for your trend. You're going to use what market structure. The knowledge of candlesticks is just majorly So that when I'm mentioning it now, when it gets to mapping out OBs and the rest of them, or when we get to confirmations, or when we get to starting at specific things, we're not going to have issues. So it's not like, okay, because I said that the bullish candlestick is what the bullish engulfing candlestick is going to come with higher prices. Immediately you go to the chart tomorrow and you see bullish engulfing candlestick, you start buying. That's not what I mean by that, right? So there are times whereby the buys can be very temporary. It can just be one candlestick. So it's just like most of the times, like if you look at this now, we had price coming from the downside. We had price coming from the downside, creating this bearish candlesticks. And you can see this pin bar that price formed. And then this indecision candlestick was price for this indecision candlestick at this point, which is what a doji. And what was a slight buy to the upside before price continued selling with pressure. Right? It continues selling with pressure. So it can just be like a minimal reversal, not necessarily like a very huge one. Do you understand? Like here now you can see how it happened. You have this bullish one, the doji, and then a small buy, a small sell before the buys continue. So it can just be like very minimal, not necessarily like here now you can see the same thing happened at this point. Do you understand? We've had a doji here. So it may not be very, very significant, like a very significant reversal. Here now again, we had on the doji, a bearish candlestick, doji, a slight buy, buy with this particular bullish candlestick before what price continues to sell it to the downside, right? So this is not like they're not like for your entries, they are majorly for what? Just for we're going to use them when it gets to Stan, please, unlock the question section of the group. I think the people are having issues. That's the question topic. So that people can get their questions there. So as I was saying, they're just for like, they don't make this for entries. Do you understand? We're going to apply them with other conferences when we get to that point. Alright? So since people are still getting questions. So
I have a question. Can you hear me?
Go ahead. Go ahead.
So my question is concerning the bullish engulfing and the bearish engulfing. So are they cases, you said that they are used to determine changes in trend. So is there a case where in like a bullish engulfing candle, the candlestick is meant to go upward? So is there a case where the reverse happens?
Yes. You know that these candlesticks they're not your entries. Do you understand? So it can be that there can be a case scenario whereby price creates this particular bullish engulfing, and right after.
No, I'm not using it.
Women.
So there can be a case whereby price creates what a bullish engulfing, right? And then right after what happens, it creates what do they call it? A doji, right? Which cannot come with a reversal, a slight reversal in the market. Do you understand? Which has now invalidated the point of the bullish engulfing supposing to come with what higher prices. So it can just be that way. You can have a candlestick doing something and the next candlestick invalidates it. You understand? Because the market is constantly being formed by candlesticks at different points. You can see that everything here, every narrative here, look at what is happening here now. You can see that this is being made up of different candlesticks. So you can have what a bearish engulfing candlesticks, next thing you have what a doji, and then you have a slight change in the direction of price. You understand? So these candlesticks are supposed to be read individually. Although when you see a bullish engulfing candlestick, you're anticipating what higher prices, right? You're anticipating higher prices. So price can be moving to the upside until another candlestick is created that can reverse it. Maybe the pin bar, maybe in the case of when the market is selling, you can have the hammer appear. You understand? So this candlestick, we're just understanding individually. We're not putting it all together now as per entries. Just for you to understand, okay, what the bullish engulfing candle represents, what the hammer represents, the pin bar represents, and the rest of them. Okay, so I think people are already getting their questions from the group. So let me just answer from the group instead. If you have any questions, just go to the group and I'll look at it and talk about it. And then someone talk about for the engulfing candlestick, does it include the wicks or just the body? So not all candlesticks have wicks. Not all candlesticks have wicks, but some of them do. So whether or not it has a wick, so long as this one is bigger than this one, right? It is what it is an engulfing. Like if you look at this particular chart now, let's okay. Let's look at this particular chart now. You have what? You have two candlesticks. This is what a bullish candlestick. This is what a bearish candlestick. Yeah. This is the one I'm calling the bullish. This is what I'm calling what the bearish candlestick. Now, if you look at two of them, they both have wicks, right? But even with the wicks and the body of this candlestick closed below this one. It means that this one is what? This one is longer than this one. It is what a bearish candlestick. So if the candlesticks have wicks, yes, the wicks will be in consideration. If they are just candlesticks with bodies, right? Because there are times that the candlestick can open and close without actually closing, without creating wicks. The wicks can be negligible, right? So if it's something like that, then you're using what the bodies. But if they both have this, the wicks should be put into consideration. Somebody said if the recording will be posted in process. What time frame can you spot your engulfing candlesticks? The engulfing candlesticks are found in all time frames. You understand? So long as the time frame has what? As candlesticks, you find all the candlestick patterns there. If you go to the board, this time frame, sir, let me explain to you how the time frame works. Now, if you look at my chart here, you can see starting from you can see that here we have the 1 hour time frame, we have what the 4 hours, the weekly, the everything like this time frames. It starts from like the daily time frame. You have daily time frame, we have 4 hours time frame, we have 1 hour time frame, 2 hours time frame, we have 8 hours and the rest of them. Now these time frames, they are the same thing. Shows that they are being represented by a different number of candlesticks. On the 1 hour time frame, you can have only one candlestick there, right? But when you now go down to the 30 minutes time frame, it will be what? It will be two candlesticks because two of 30 minutes time frame candlesticks will make one of 1 hour candlestick, right? Which means that you can have two candlesticks on the 2 hours time frame, but when you go to the 4 hours time frame, those two candlesticks will join together to become one. You understand? That is why you notice that the higher you go on time frames, the fewer the candles become because they are merging. One candlestick on the 4 hours time frame will be four candlesticks on the 1 hour time frame. Do you understand? So yes, to answer your question, you're going to find candlesticks on every time frame on the chart, right? And then someone said, pick the hammer and the pin back candlestick. Can you have very short wick, higher or lower? It has to be significant. It's not like it must be so long like this. But you know something that shows your rejection. The rejection should be clear. You understand that? Okay. In fact, I want you to do it like this. Let it be a candlestick that is bigger than the body. Right? If you look at this now, this is an example of it. This is an example of the hammer candlestick. Let the rejection be bigger than the body, right? Something like that. If you look at this now, this is an example of what a pin bar. Let the rejection candlestick, let the rejection width, let the rejection width be what? Be bigger than the body. That is what I want you to do, right? So yes, the pin bar and the hammer candlesticks allow the rejections to be very significant. Let them be bigger than the body, right? Something like this now. Someone said for the bullish and the bearish engulfing, must both of them be from the same position? No, they're not even from the same position. One of them is longer than the other one, right? So they must be next to each other. If that's what you ask, so they must be next to each other. So that the one that is engulfing the one that is engulfing, the one that is bigger must be on the right hand side. Do you understand? So like this now, you can see this is a bullish candlestick next to a bearish candlestick. And the bearish candlestick is what longer than the bullish candlestick, so it's what a bearish engulfing candlestick. If you look at this particular example here now, you have a bearish candlestick and a bullish candlestick. But then the bullish candlestick is what longer and bigger, enclosing, covering the bearish candlestick, which makes it what a bullish engulfing candlestick. Right? So they must be next to each other. Yes. Someone says, does the color matter? No. For the hammer and finger, the color does not matter, but it is the direction of the rejection. If you look at something like this, something like this now, you can see that price is rejecting from the downside. This is a sharp rejection from the downside, right? Something just like this. This is a sharp rejection from the downside, right? So in this case, it is a hammer. You can have something like this now, which is what a sharp rejection from the upside, just like this. In this case, it is a finger. So no, the color most of the time does not matter. Although most of the times you see that the hammers are green and the fingers are red, but sometimes they may not have necessarily changed. Do you understand? So you're paying attention to the rejection, that's the weak rejection, not the color. What direction is it rejecting from? Do you understand? And someone said that in a situation whereby the engulfing does not cover the other one entirely, can you say that engulfing? No, it must cover. When it does not cover, right? Let me say two of them are at the same level. It's a type of candlestick that we call the tweezers. When you have two candlesticks at the same level, they're called the tweezers, right? So no, for it to be an engulfing, it must cover. And someone said, we'd like to know, okay, concerning the bullish and the bearish candlestick. So the bullish candlestick is formed first, followed by the bearish engulfing candlestick. So the market go up or down. If the bullish candlestick is formed first, and then the bearish candlestick is formed next, and the bearish candlestick engulfs the bullish one, definitely the market is going down. Whatever has the name is what has the direction. Bearish engulfing candlestick, the market is what we're anticipating that the market is going to the downside. Bullish engulfing candlestick, we're anticipating what higher prices. Do you understand? So whichever one is covering and has the name is where you are anticipating the direction to go to. And the highs and the lows of the candlestick be considered as a wick. Yes, it is the highs and the lows that actually creates the wicks, actually. When you have markets fighting, if you look at what we marked out here, if you look at what we marked out here, right? It's actually the highs and the lows that are creating it, that are creating the it's actually the highs and the lows that are creating the wick. That period whereby you have them fighting, where you have them fighting. Do you understand? If you look at this now, this is a week, right? The height, this is a week, the low. So that rejection whereby they are fighting and struggling, yes, it creates weeks in the market. All right. Okay. Somebody said, okay, I think I answered the question already. In the case of the bullish or bearish engulfing candlestick, must they be on the same level? They should not even be on the same level, right? One of them must cover each other. For the indecision candle, does the color matter? Well, where are you seeing color now? I told you that the indecision candlesticks, they are being formed on the same. It's just like price opening and closing. Look at something that I do. This is what a doji candlestick, right? When price opens and closes at the same level. I'm not sure you can see anybody here. Can you see any color? Can you see this thing as well? This is not red, neither is it green, right? This is an indecision candlestick. It does not have body, so you're not going to see any color. It is indecision for one reason, because it is neither bullish or bearish. You understand? So there's no color there. With the live session for Q&A will drop as well. Yes, everything will drop there. Must the engulfing candlestick cover the wick of the previous candlestick? Because yes, if both candles have wicks, then the engulfing candlestick cover the wick of the previous one. But if two of them are just candlesticks without wicks, do you understand? In fact, when you go to the chart and you see something that is covering something, it's very evident. You know when something covers something and when it doesn't. Do you understand? So once it covers like that, that is what I'm engulfing. And then someone says, how do you know when the market is about to change direction when trading? So this is just candlesticks. This is just like the first step into technical analysis. We're just starting. This is just the beginning. When you start getting to change in direction of market, that is what market structure. So allow us to get there first. Rushing. Do you understand? Somebody said, who is asking me if the color of the dirty candlestick? And Precious, after this class, I know you very well on WhatsApp. So I'm going to message you tomorrow afternoon. After this class, I want you to watch this recording from the beginning and to the end. And I want you to now answer this particular question. See this question you asked me, does the color of a dirty candlestick matter? I want you to answer it tomorrow afternoon by 12 p.m. If I don't see it in my DM, I'll message you to ask me on WhatsApp. Watch this video from the beginning and then answer. You just drop the question the way that you get it here, and then you drop the answer for me. Does the color of a dirty candlestick matter? And then for the other ones, he said, please, I would like to know, is the hammer candlestick still concerned with the wick that is up? If the wick is at the top, that's the indication of it is no longer hammer, it is now what a pin bar. You understand? And then if the wick is at the bottom, it is what a hammer candlestick. I told you that the focus when it comes to those hammers and pin bars, we're focusing on the rejection of the wicks. Do you understand? Yes, actually, you can call them reversal candlesticks. Yes, you can. The hammer and the pin bar, you can call them reversal candlesticks. If a candlestick has equal length of wick at both sides, how do you know if it's a hammer? If you have candlesticks with equal length, if one of them is not engulfing each other, like they are the same levels, they are actually called tweezers. You understand? For something to be engulfing, one must be bigger than the other, or the duration of one must be longer than the duration of the other. Just like that. You understand? You have bullish engulfing, then bearish engulfing. Will the market go up or down? If you have bullish engulfing, as let me say now, this is a market structure. Price has created this bullish engulfing candlestick, and then price is buying and creates a what? Creates a next bearish engulfing candlestick. Automatically, it is what the bearish engulfing candlestick that is now ruling the market. Do you understand? Like your question now, I want you to look at it logically. Price creates what? Price creates a bullish engulfing candlestick and is buying, and then creates a doji. What do you expect? It is the most recent thing that is now what's controlling the market. That doji will now come with a reversal. You understand? The person that asked that question. Then Cash Talk said, you'd like to know if the I don't understand your question. If they are long, the rejection was the long week. I told you that for you to even see it clearly, just look at the weeks that was longer than the candlestick daily. I think that should be clear. If a dodgy candlestick occurs before an engulfing candlestick, can it be considered valid? No. A dodgy candlestick has occurred, and then probably price has done its thing by reversing. When it occurs like that, it can actually cause what? It can actually cause a rejection. When people are coming in downtrend, create a dodgy candlestick, which is what a reversal candlestick. You cannot create what a bullish engulfing candlestick to what starts the uptrend. So whatever candlestick you're reading is what is controlling price, the most recent one. Forget that price created what a dodgy or a reversal before it. Once price creates what a bullish engulfing candlestick, you are anticipating what higher prices. Kalu, I don't understand your question. I'm trying to. You said in a case of what a bearish engulfing candlestick, should the bearish candlestick cover the top of the bullish candlestick? Yes, it should. What makes it engulfing is the fact that it is covering. I gave an example. I said that you can have a friend that is what, like, let's say 6'5" tall, and then you're like 5 feet. If that person should hug you, the difference in both heights is going to be clear. You understand? So the person's head must cover your own head for you to say that the person is taller than you. Do you get? So yes, bearish engulfing, the bearish candlestick must cover the low of the bullish candlestick. What do I mean by price rejection when I was talking about hammer and timber? If you look at this particular candlestick now, this is what? This is a rejection. You see this wick. You see this wick here. This one here. From this low to this high. This is what? This is a rejection. Remember that this is where price opened. and then sellers were able to sell, to push price back to the downside. And then buyers were like, no, we won't agree. So they rejected price. They rejected lower prices and instead what rejected it to the upside, pushed it to the upside. So this week, this is the rejection that I'm talking about, right? So I think that's the last question on the book. So this is our very first session, and I would like you guys to go over it when the recording is done. For those of you that are having issues with this, right? You can go over it when the recording is done, and you can always ask a question on the questions portion or the question topic on the sample official Telegram group. So I want you guys to attempt an assignment for me. Of course, you guys are like 700, I think, or 600 plus, right, on the group. So this means that I may not be able to personally come to your DM to say, why did you tell us to make my assignment? So it's between you and your conscience to realize that you paid for this and you need to make the most out of it. So if you like, attempt the assignment. If you like, don't attempt the assignment, whatever feels right to you. But I want you to go to your trading view app and try to map out 3 bullish engulfing candlesticks, 3 bullish engulfing, 3 bearish engulfing candlesticks, then 2 dodgy candlesticks, 2 hammer, and 2 pin bar. 3 bullish engulfing, 3 bearish engulfing, 2 dodgy, 2 hammer, 2 pin bar. You can just use your rectangular tool to draft out, like, so that I would know what you're talking about. Just take a rectangular tool and map out the candlesticks just like this. Something like this. I'll be able to tell what you're trying to show me. Right? Just use a rectangular tool just and map it out. Or instead you can pick up your trend line tool and then use the text option to write bearish engulfing or bullish engulfing on it. Just indicate three bullish engulfing candlesticks, 3 bearish engulfing candlesticks, then 2 doji, 2 hammer, 2 pin bars. So this takes us to the end of our very first session at some point. I'll see you guys again on Wednesday, 9 p.m. Please make sure that you're